All right, guys. Thanks once again for the reminder. And this is a long overdue session. I know we've been gone for a while, the trips and all these things that's been happening. So I'm glad that we're back. And this time we have more information that we can share with each other. We can polish on some of the things that we spoke about last time. Um, some of the gems that I gave you last time, they're not updated. So that's the best way I could explain it. They're updated to where even for me, when I got a better understanding of it, I was able to say, oh, okay, when I speak to you guys again, I have to update you guys as well. All right, so let's see. From what everyone said, I see seeing the unintentional movement. Okay, so we'll cover that for sure. My difficulty is confidence, entries, London session, and unintentional movement.
Can you
Mhm.
do like top-down analysis as well,
I
please?
Yeah, I could do a top-down analysis quickly. I won't do it for much longer because like I said earlier, a lot of us are that's kind of the beginning stages of the market, just understanding your highs, lows, and those basics. But yes, for you, I'll go ahead and do a quick rundown on a top-down analysis. That way I could dive into more of the butter, like the unintentional movements and the entries and things like that, and continuations, etc. Okay, so let's go ahead with to do a top-down analysis. I'm gonna use a different chart, a clean chart. Let me see. I think I have a clean one here with GU. What is this? Oh, okay, this is GBP, JPY. That's fine. I'm not currently trading it. Actually, no. Let me use this one. Euro USD FXCM. Boom. So I'm gonna go quickly on a top-down analysis. Just basically if I get into the market. First time on this chart, what would I be looking for? It's very simple. I'll probably go to the 3 month. All right. So from the 3 month, I'll quickly just analyze. I won't do too much marking, but I just want to start from point. I know we started from this low. So I'll put that low right here. I know this is a low that led to this high. This high led to this low. This is my lower high. This high led to this lower high led to this the higher high. This high is higher than this high. This higher high led to this lower high. This lower high is higher low, I'm sorry. This higher low is higher than this low, so on and so forth. All I'm doing this for is just to kind of identify the direction of the market. Another simple way you could do it is just like from points to point. You could just draw an arrow from both sides of the market or both sides of the is it small for you guys? Let me try to zoom in some more so you can see a lot more clear. There you go. So that way you can see both, I can see both sides. So all I see here is what prices inside of this channel is going upwards. So this is another way to just give yourself a clear understanding of where it is. And this high right here, the last low that it led to was this point right here. So I'll mark that as well. So now I know that price is basically trading between these two zones. All right. So this will be my understanding of the market right now. I know that I'm trading between these two zones. So this is just a quick top-down analysis just to give me that understanding. I know I'm trading between these two zones. From now, I will go to the monthly just to see the same thing. It's not going to give me too much different from the 3 month to the monthly. Because these are higher time frames, so I don't want to do too much marking around these types of time frames. Simply because price is not going to come to this zone this like immediately. It's these takes months. Each one of these candles represent a month. So these are year. If you all of these will equal out to a year. Look how far back this goes. 2028. I mean 2008. So you don't want to say, oh, price change character, broke structure, this so now it needs to retrace up here to continue down. Yes, but this is look how long ago it happened since 2008 and now it's reached this line. So you don't give too much precedent to the monthly as far as when you're getting into a trade right now, unless price is currently at that zone. Now that I'm on the monthly, what I'll do is move closer to price action, where price is currently at. So right now I can see price is approaching this monthly order block right here. Why am I marking it? Because it has significance. It was a high that led to this low that broke this structure here. So that is why I'm giving it precedent. Otherwise, if it was just this high led to this low and didn't break anything, I'm not marking it as significant. Okay, so now I've got this one marked. I know that this was a break of structure, so I'll mark this break of structure. And not only did it break this structure, it also broke this structure here. So we know that this high had enough strength that it broke two structures. This high that led to this low, broke this structure. This low led to this high, led to this high once again, and came and broke this structure. So we know this area has precedent, and this is where price is approaching. So at that point, we know that this is the supply that we can expect to sell from. At this point, this is what's going through my mind. That price will sell from this supply. Let me mark it. Say what we on monthly. I'll just put daily, but it's not a daily POI. So I'll edit it and put a month. Okay, boom. So we know that price, we're looking to sell from here. But that's whenever price approach. But we also got to pay attention to this, the momentum that price is approaching this with. It's approaching it with strong, strong, strong volume. I mean, look at the size of this candle coming in. Now it's not there yet, but if it prints another bullish candle into it like this, I won't expect this to hold, especially because we have like a relatively equal high right above. But this that's more of an intraday thing where you'll analyze when price gets closer to that zone. But there will be a reaction for sure. For sure, you're going to get a reaction for some trades, but it'll let you know whether you're trying to trade to the next lower low if you're a swing trader, or if you're just trading for the counter in order to continue up to the next point of supply, which would be up here, because this was the last high that led to the low that broke this structure. This one didn't do anything. So chances are, if this one gets if the zone gets violated, so will this high, because that's a trend line that you can mark as well. That's right there, right? Boom. So this is still me analyzing from the 3 month to the monthly. Now I'll go down to the weekly just to kind of get closer to price action still. Okay, what can I see on the weekly? I can see that price was in a consolidation zone. Price was ranging in this entire area. This area right here was a ranging zone for price. All it kept doing, is consolidated. It broke above the highs, then finally broke underneath the lows. So we know that this whole range has been completed. Price has completed. So if price broke above again, next thing you can do is come mitigate midway and push up and continue. But if it doesn't come back, then we get this mitigation. We could come back and take this low here. But that's another thing just to watch price action. So I'll just mark again. Now that I'm closer to price action, I'm going to mark once again. High. Is the screen small for you guys? Do you need me to zoom in more? Does the candles look small for you guys? Like for me, it's
No,
big.
it's perfect.
Okay, cool. All right, so let's go here. This where we on. We're still on the daily or weekly actually. So we'll mark weeklies: high, low. We're just and this low led to this high, broke this here structure. This high led to this low. This low led to this high, broke this here structure. So we're just marking out current price action. We're not doing too much. We just want to keep our minds clear of what's happening over the recent price action. All right. So like I said, still giving you the top-down analysis, how to quickly just kind of see what's going on. All right, boom. We know we have a huge imbalance right here, but we're not going to mark it. I'm just identifying it right now. We have an imbalance right here, but we're not going to keep it simply because this is still on a weekly. Price is not going to, when you go on a lower time frame, there's a lot more information within this little zone. So you don't want to mark it as an imbalance because on a lower time frame, there's break of structures, there's change of characters, all type of things going on in here. So we just know that this price will need to come back here eventually. All right, so now we go down to go to the 3-day, see just to make sure everything's still the same. We have consolidation range right here. We have a high that led to a low, broke this structure here so that we can have a reaction here, but price hasn't reached here yet. Okay, so we know we can expect a reaction here as well, but I'll explain to you as we get to a lower time frame. But since we are on a 3-day, let me go to a daily. All right, now on a daily, here's what I want to see. Now I'm seeing that I'm closer to price action. I have this low that led to still marking using my highlighter tool. That low led to this high. Actually, before I do that, let's do it from the left side first. So from this high led to this low, and we'll put it as the daily. This low led to this high. This high led to this low and broke this structure, this structure, this structure, and this structure. Okay, this low led to this high. This high led to this weekly low that broke this structure as well as these structures. Okay, so we are understanding that. And when we look to the left, we can see that this last low here that led to this high that broke this structure and these structures was induced. This low was induced of it was induced right here. Price simply swept that zone. It did not close a body, it swept it. So when we see a price sweep a zone like this, in this fashion, price is not trying to go down yet. Price is letting you know it's time to go up. It didn't close a full body. Now we're pushing back up. Obviously, is the reason why you see this push happen here. So let's continue. So we already know from this point is where we last left off. Price came and took all this liquidity that it built all right here. It took all that liquidity. It has enough petrol to push up to come mitigate this zone, which is the daily zone that we marked. As you can see, there's going to be more details here. We're going to refine it to make it smaller. But for now, we know that this is the overall daily zone that we're trying to catch a trade to sell off from. So we could trade towards it. And once we get in here, we look for the sell to sell down to the next zone, to the next structure. But now let's continue marking out our structure. So we know that these were the zones that price led to. So this high led to this low. I'm sorry, I did forget to mark this one because this high led to this low and broke this here structure. The reason I didn't mark this one here, let me zoom in so you can also get a better understanding why this one is not marked as a structure. On a lower time frame, this is a structure, yes. But for right now, on the daily that we're on, this is not currently a significant structure. It's actually an equal low that got swept. But as you can see, this high led to this low first. It didn't break it. But this high here led to this low and broke the structure. But I just marked that this overall high led to this overall low to break this overall structure, which is why I gave it significance. Now, this low led to this high here that led to this low that broke this structure. And that was the last breakup structure by price. So now we can say this low led to this high, broke this structure. This is the change of character on the daily time frame. On a lower time frame, like a 15 minutes, hour, 5 minutes, etc. This is not a change of character. It's more like a breakup structure on a different on different time frame, on a different in different zones. So from there, we're gonna say this high led to this low here, which was higher than this low. This low, I'm not going to mark these because they didn't break this structure. It led to this high. Or we can say this. Yeah, it led to this high that broke one, two, these two structures. This high led to this low. Now, this is one of the information that I told you guys last time when I was saying, if you don't see three momentum candle in the direction, not to classify it as a significant high or low. Now, from what I've been able to see in the evolution of the market, if let's say, for example, right here we have one, two, how it did these two bearish candles, which have a wick low, then it pushes high. If the direction it pushes wicks higher than the previous high, then you can classify it as a low because that low led to this high that broke this structure. It swept it. Even though price came back and did a complex pullback, but you can mark it as a low because you'll see in different lower time frame scenarios where this happens more clearly. But for now, I'm not going to mark it yet so I don't throw too much confusion. I'm just going to mark these two highs, this low. This low led to this high as well, broke the structure. This high led to this low, broke the structure, so on and so forth, etc. We're only marking this so we can understand where the significance are in the market. All right. So let's zoom out briefly. And we're still on the daily. All of this just giving us the understanding of where price left all its significant zones. This is another one right here as well, because from here, price led to this high that broke this structure, and then this low here that led to this high that broke also this structure. So we know the last point, the 2 points that we're trading in right now will be this area here. and this high here. Boom. These are the 2 points that the market is at. But now we want to look to the left and see what point of liquidity to the left are we approaching that's closer to price action. Okay. So now we can say, let's use the highlighter tool again. We had this high, led to this low that broke this here structure. This low led to this high that led to this low that broke this here structure. And this low led to this high that led to this low that broke these here structures. So boom, this is where we're at. And this is currently where price action is. Let's draw this tool here so we can identify where is price currently at? Where did it tap? Because we see there's a reaction happening here. Price is starting to go down. We want to know why. So let's zoom in closer to the zone. Okay, what do we see? It was a high that led to a low that caused a break of structure, right? This break of structure has significance. So price came and mitigated the area here. This, you got to get the top of the zone to the bottom. So this was your OB that price mitigated. Does that mean that price has reached the point and is not going to fly down and sell completely to the next structure? No, that doesn't mean that. It's just this is the zone where price is giving you a reaction from. But you know the daily zone is where the more liquidity lies. So now that we know that this has been mitigated, we're going to mark mitigated as a mitigated OB. So now we have a point of understanding that when we get to the lower time frame, we're trading from the fact that price has just mitigated this zone and is now giving us a reaction because this was a high that led to a low that broke a structure. Those are the only time you should actually give precedent to a trade is if price mitigates a zone that caused a break of structure, especially if it mitigates a zone that came from the left side. You want to know, you want to pay attention to that. So now we can go down to, let's say, I like to jump down to 4 hour at that point. I want to go down to the 4 hour to see what's been going on. I'm not going to necessarily mark right now. Let me see. We have the low here led to this high because it broke this structure. And then this low led to this high. This low led to this high, broke that structure. Another low led to this high, broke that structure. But price came and already swept it. So these are just thoughts that's going through my mind. But I'll mark it for you guys to still see what I see with hindsight. Sometimes I don't really mark it all the time because I could already see it. But let's go ahead and do it quickly. And I'll switch over to the 4 hour candle. Um, let's go 4 hour low. High broke this structure. This high broke this structure. That's why I mark it in case you're wondering. This low led to this high, broke this structure. Then this wick low here led to this high, which is the same high that we have here already, and broke this structure. Cool. And price came, swept it once again. Same thing that happened at the bottom where we left from the daily. Price wicked, did not close a full body on this candle, but it did on this one. So there's still more liquidity left that price can come to. Okay. One being this one. This is our first 4 hour demand that we can say, okay, price can come and tap on this one. That's first level of it. Second level is this extreme. We could say price can induce that one and come down to this extreme. So now you have a decisional and an extreme zone. 1, 2. Now, because price had already mitigated supply, this one will fail. But you want to see how price approaches it. So now I'll go to the 1 minute. I'm sorry, to the 1 hour. All right, from the 1 hour, what do I have? All right, easy. From the top here, I'll say we have high, low, low led to the high, it didn't break. This low though led to this high, broke this structure. This low led to this high, broke that structure. This high led to this low. That's our first change of character. This low led to this high led to this second low. This is our break of structure. That is where our point of entries begin. So the minute this first area here, granted I'm on a 1 hour, so this I'm gonna mark it as a break of structure for now, because on a lower time frame is gonna be a change of character more up here. So for now, I'm just gonna mark break of structures. So what does that tell me now? That sellers are in control. Sellers are in control. This one out, this zone that we've mitigated hold precedent, and all of this is happening. So let me pull. I can do bar replay. I'm gonna quickly do a bar replay if it lets me. I don't know if it's gonna let me, guys. Yeah, it's not letting me do the bar replay. That's fine. So let's just go down from the 1 hour. I have an idea where price is. I know I've came down and mitigated here. But what I wanted to show you was in this moment here, when price reached this POI, let's say I was right around this area of the candle, this area in the market, I see price come in and mitigate this zone that we've marked on the, I believe it was the 4 hour. I'll go down to the 30 minutes, see what happened here. We had Asia highs taken, price mitigated, came down, swept the low of Asia high. I'll go to the 15 minutes. Okay, 15, boom, 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 and 5 minutes. I just want to show you where your entry, where you would look for that entry and how you would identify it for a second. Now, this is still the top-down analysis for the young lady who asked me to do a top-down analysis. I'm just going through it briefly, going from, the week, the monthly, the 3 month to the monthly to the daily, just kind of narrowing down where price is currently at. But in this case right here, we have this high led to this low, this high led to this low led to this high. Let me mark it. Boom. And then this low here led to this overall high. Okay. So as soon as price broke here, this is my change of character. I'll identify it better if I go to like a 3 minute or a 1 minute. These are time frames that I like to go to get a more clear look at the market to see if I have a clear change of character. Yes. So this will be my first zone to mark change of character. So this will be my change of character, but I would not take the trade yet. All right, I'll see price change character here, and also break structure here, broke structure here. But the first break of structure I would have found would be this one here, and these would be the retracement for the entry. But let me go to 1 minute to see if we have more. And if you have any questions, guys, feel free to speak up and ask. It's no problem. I want to get, okay, there we go. All right, perfect. I take it back. So the first change of character did not happen just here. When you on the 1 minute, you can see that better. So I'm going to mark this as a break of structure. The first change of character happened right here because this low, remember what I told you, if it wicks above it, it's a break of structure. This low led to this high, broke this structure. This high, this low led to this high, broke this structure as well. So when price came down from this high to this low right here, this was your first break of structure. I mean, change of character, I'm sorry. This was your first change of character, and I'll mark it as a 1 minute change of character. And this was your first break of structure right here. Came from his high down here and gave you a break of structure here. Typically, I like to see the break of structure happen from a structure to the left, which normally happens with EU and GU. Right now, I'm just doing the top-down analysis actually, this is EU. I'm doing a top-down analysis in this style, but typically I want to see the change of character happens from a structure from the left, as well as the break of structure to happen from a structure from the left. Now, here's where typically I could say this was it too. This was a low, and it caused another break of structure. So price gave me an additional break of structure. So all of this right here is confirmation that I can now sell. Now, the question comes to mind is, okay, where is my selling point? Where's my selling point? Right here is one of the things that I want to emphasize on are impulse candles. That's something that Yeremi spoke about even in, I forgot, the boot camp. I think it was not revision. I think it was either back to basics or still summer camp. He spoke a lot about this on summer camp. When you see a full body candle like this, also known as the impulse candle, and it led to a break of structure. Let's say you've seen this right here, but it did not break this structure, then no, it has no validity. But when you see this type of momentum candle where it's full body, no wick, and it leads to a break of structure, that's where price is going to react. Now let's see why. From up here, from this high to this low, the change of character, everything's been mitigated. Price has already retested these zones. Price has already came back and swept every signs of liquidity that could be. There's this wick, but there's no unmitigated OB there. Then this high led to this low and gave you an impulse candle. What price will always do is come back to that candle before it and respect that candle. And this is where you find your entry. This is where I mark. You'll see a lot of the trade. When I go to the one that I use, you'll see where I have a lot of impulse candle entries. And this would be where you enter because why? In you go to the 3 minute, for example, it might even look like an OB. Let me go to the 3 minute. Uh, Boom, boom, boom. Okay. Even on a 3 minute, it's even more clear, the impulse candle. On a 3 minute, it's a bigger zone. So if you were worried about getting stopped out because you didn't take from the top of the zone to the bottom of the zone, because this right here is, let's say it's 2 pip, you're like, you know what? Normally I would risk taking this, but if you like, you know what, I want to stick to the average of 7 pips or more. So you say I'm gonna take the entire zone. That's fine. You just move it to the entire zone. Look at that. You're still at 3 pip. You know what? I want to take it from the top of the zone to the bottom of the zone. That's still fine. You're still at 4.8 pips. But look at this. The impulse candle is still here. Even on a 3 minute, you can tell that this momentum candle that led to this breaker structure is still there. Price will come back to respect the candle before it, which is what happened here. Price came back, mitigated the impulse candle zone, swept. Looks like it swept or it created an equal. Nope, it didn't sweep it. Respected this high because this high already mitigated, came back, retest, pushed down, and it flew away from there. This would have been your entry. You had a change of character, you had a break of structure. Then price gave you an additional confirmation in case you missed this entry here. This was your first entry right here. In case you missed it, because let's say you wanted extra confirmation because this break of structure happened and price quickly ran up, and then you FOMO thinking, okay, it's not coming to my zone. You scared, and it came back and mitigated. You're not sure it might come through and violate, but you waited again. Price gave you more confirmation, and then came back and still gave you that entry. So you could have waited for 1, 2, 3 breaks of structures, even 4 from this zone right here before price came back and retest. It won't always retest. Sometimes it might just mitigate here and fly off and you get left out of the trade. But all you want to really pay attention to most of the time, especially on a 1 minute, when you're on a 1 minute or 3 minute, is that price changed character and broke structure to the left. Because those are the structures that hold significance as a little bit more than the structure that just got printed. You know what I mean? This would be considered a structure that was just printed because this high led to this low, broke this structure. This low led to this high led to this low, broke this structure. This is a recent structure. This is a previous structure. This is a previous structure. This is a previous structure. Those have significance. So when they get broken, you know that there's strength where it came from. Okay. And on a confidence level, somebody might say, well, what about these trend lines right here? What if price would have what if I'm assuming that price will come and sweep these trend line to induce this high to then push down from here? If price wanted to do that, it wouldn't change character, broke structure this many times and give you a momentum candle like such. As you can see on a 1 minute, you have this full body, and on a 3 minute, it looks like a cannon. Okay. So this is just giving you a quick top-down analysis for if I was to say, I jumped in the market, price is pushing up here, and I'm trying to enter this trade to sell off. Now, I want to go over to
Sorry, can I ask a question?
of course,
Do you know sometimes price actually taps into an impulse candle and just moves off. So what do? Do you like include the impulse candle or the zone on top of that?
you want to look for the candle before, the one that pushed. Okay, hold on, let me go to it. The impulse candle or the momentum candle?
The impulse candle,
This one.
the one that caused the BOS, that is like a minute imbalance with no wicks.
It's about this one here.
Yeah, yeah, that one.
Okay, so 9 out of 10 times, price will mitigate the one before it, which would be this candle. When you see the impulse candle, which you'll see on the next, when I go to these other charts, you'll see 9 out of 10 times is this candle here that will get mitigated when price creates these impulse candles. And impulse candles are everywhere. So I don't want you guys to specifically fixate your eyes on impulse candles and just keep looking for impulse candles and the candles before it, because you will get stopped out because they're everywhere. Look, this one wouldn't be, look, another impulse candle. They're literally everywhere. How do you know which one holds significance? Is based on the position of the market. For example, in this case, we've mitigated a high time frame, which was this daily zone, I mean, this 4 hour zone here in gray. Then price gave you a change of character breakup structure. You're adding all these confluences together. Then from these change of character and breaks of structures, price came up, mitigated, and then printed this impulse candle, which is, for me, it printed this impulse candle after this mitigation of this zone here. Because this was the high that led to the change of character, retest, price retest this OB here, because it got engulfed, retest it, caused this break of structure. That lets you know there's no need to come up here. It already mitigated this zone and then caused another break of structure. Price will not come up to now sweep this, for example, this trend line, if it already mitigated this OB here that created the third leg of the trend line and it led to a change of character and it retested and it led to a breakup structure. Price not coming back here. Unless it came down from this breakup structure and mitigated this zone before coming back to test here, then you can say, okay, it's going to come and violate it because of the invalidation model. It tapped the demand before the supply. But that's not the case of what happened. So if I'm answering your question right, in these cases where you have these impulse candles, price will 9 out of 10 times mitigate the one before it. So you might have to change around different time frames to see. If you see, for example, are you seeing it on a high time frame or on a low time frame that it's mitigating the momentum can this one instead and it's flying off? What time frame?
5 minute, 3 minute.
And it's this candle is mitigating, not not the impulse.
Yeah.
Not Okay, so I'll look in the different breakdowns, and if you spot it, let me know so I can see, so I can better understand why.
All
Because
right.
most of
Thank
the
you.
time when I do the trades, I've always you'll also see on the next chart, it's always the momentum candle, this one
All
right
right.
here, that causes it. All right, so let's go over to the GU. And for the young lady who asked me to do the top-down analysis, I know I didn't really go too deep into it, but did you get a quite a better idea of how to go from one zone to the other? If she's still there. All right, let me also go to, I think it was Euro, USD. All right, boom. Let's start on Monday. Okay, so we'll start on Monday right here. Okay, so Monday is where I'm going to start right here so that you guys can get a better idea as to why or where certain trades happen and why I took them. So we were coming off the weekend. As you can see, this was Sunday. Asia opened up on Sunday, and it was consolidation right here. We consolidated, and we broke under. Frankfurt, same thing, consolidated. Now, I don't normally trade London, but here's one of the detail that Yerimi um, gave me when it comes to the unintentional movement. What you need to know is that the unintentional movement happens in many different ways. It can be pro trend, meaning price can pretend like it's going the direction of the market and come back to sweep. And it can be counter. Price can make it look like it's going the opposite way, a quick fake out and then come back and sweep. And another way is it could be in a form of consolidation. That I didn't quite know it before, but now I do. It can consolidate, as you can see it's doing here during Frankfurt. Price consolidated. It broke high first, then broke under. And whenever price break above, let's say in a consolidation range like this, when price breaks above and under, or vice versa, under and then above first, whichever one it broke out of, if it goes away from it, comes back, it usually leaves an unmitigated zone in the middle of it or in the consolidation range where it's gonna mitigate again. So in this case right here, for me, it was this one right here. Granted, price came back to it much later, so I didn't take that trade because it had already hit supply demand to push above to come to this premium. But let me explain why this trade happened. I just want to give you a better understanding and what to look for. 1 second. Okay, so here we go. Let's go to 5 minutes. I believe price is probably gonna. I don't know why my bar replay is not working. This is madness. Makes no sense. All right, let's go. Let's start from here, guys. All right, so from the 5 minute here, we had this high led to this low, broke the structure out of the consolidation range. We had another similar consolidation here. Price broke above, price broke below, created a higher. It'll be better on the 1 minute. I'm sorry, let me go to the 1 minute because the candles are too thick and you don't see as much details that I want you to be able to see on the 1 minute. I do a lot of markings when I'm watching price action because I try to tell the story to follow along. That's the best way you'll be able to not predict, but predict where you think market is gonna go to enter your trades. All right, cool. Here we go. Consolidation happened. This is all Frankfurt. New York, London's about to start. We had an inducement high and inducement low. So we know that the consolidation range is done. Price came up, created this relative equal highs, but it didn't sweep above this one, and it came down. We had a break of structure. So this was my change of character. So if you're looking for, well, which one was the unintentional movement? Here you go. Two forms of it. Consolidation was the first unintentional movement, and the bullish one right here. This was the second consolidation, unintentional movement right here. Price consolidated and gave you this false hope that it was going to go up. Then it pushed down, gave you a change of character because it broke this low. This was the low that led to this high, that broke this high, causing the first break of structure. But then this high led to this low, breaking to the bottom, causing this other change of character. So now this is the most recent change of character was right here. Then this high led to this, this low led to this high, but did not break over this high. So there's not a new change of character again to the top side. No, it's not. But this high led to this low, causing this break of structure. Immediately, what do you guys see already? What do you see so far already, guys?
Impulse
Yo, so
candle.
Impulse candle entry, literally.
yo, yo, Sauce, man.
Yes, sir.
Yeah, like I have a question. Like, you see, the way you marked the unintentional movement here.
Yep.
Yeah, well, like, you can see this is almost like it's almost like a demand zone. Like, there's a small candlestick, and then then there's another that's a bigger one, which shows like bullish momentum.
This here.
Yeah, over there, yeah.
So you expect you said your question is why wouldn't this be a buy instead?
No. My question is like, why wouldn't you consider that? Like, my question is like, why wouldn't you consider this as an intentional movement? Because, like, due to the reason, like, it shows like a bullish momentum, and
Mhm.
why? And then when you consider this like an intentional movement, then you can consider it as a change of character when it comes and break below. Like that's how I can see things from my eyes. Maybe you can explain for
Okay.
me a little.
Yeah, so the unintentional movement happened before the start of London session. So it can happen during London, don't get me wrong. Just like in New York session, unintentional movements happen during during some of the trading windows. But when you're coming into the window of New York, New York is here to do a few things. It's to sweep Asia, to take the liquidity of Asia, or to sweep the liquidity of Frankfurt. So that way it can pick a direction to push towards. So in this case, if you say this is an unintentional movement, It is. Look at it. It's unintentional movement in the same direction as this one. What I'm showing you is that the unintentional movement, the first leg of it was right here. Price was unintentionally telling you it's going to be bullish. And then it came down and changed character. For those who are expecting, oh, this is another unintentional movement to the top side, this was just to come sweep this low. Now price is going to be bearish again. They will be looking to buy from here because this
Yeah,
what? Low,
yeah,
high. So they're going to mark this as a break of structure. They're going to say this right here was their break of structure because this low led to this high, that led to this low, that led to this high. So they're going to expect this to come down, mitigate here, and push up to create the next high to come up and take Asia's or to come sweep this side of the liquidity. But from Frankfurt, Price had already told you this was its unintentional movement once it came down and gave you this change of character. Once it came up here, if it would have closed a body above this zone, then we'd be having a different conversation. But being that it did not, and price shot down and gave us a break of structure and left what we just talked about, impulse candle. Look at this. Look at the strength of this candle.
Source. This is what
Yeah.
I was asking. Look, you said an impulse candle previous to the the OB above it. Look, right now it reacted from impulse candle. Do you see what I mean?
Yes, but
It
it
didn't go to the private,
remember
the
what I
one on
told you,
top of it.
it will mitigate the candle before it, not the order block. So the candle impulse candle here, this whole candle right here.
Oh, okay, okay,
That
okay.
was your impulse candle. It had no wick, a straight body. The wick is literally a little tail at the back. And Urimi talks about this too, where it's like a firecracker example. He says when you light up a firecracker from the tail, it wicks down. It's just the wicks get smaller and smaller and pushes this way, lets you know the direction it's going. But in this matter, price came and mitigated the candle before it, right here. Two
Yeah,
tap.
all right.
Two
Yep.
and fly off. Sometime price doesn't need to come all the way up here because let's look. Where else do you see any form of liquidity, such as a high that led to a low? All this right here was ranging. There's another, you could say this is an impulse candle, but this didn't lead to nothing. This just led to this and then another push up. This was the momentum that broke the structure. And this was the impulse candle that injected the money into it. But for the sake of being safe, you could take the whole zone. As we know, to mark the proper way to mark the zone is the high of the zone to the low of the zone. You'll see as we keep going in the week where I take trades where I started being a lot more risky. And instead of taking the entire zone, I started taking my stop loss right above it. Why? Because I realized price, when it comes back to these impulse, it didn't always go deep into the entire zone. It would still respect this. So I started ranging it. But I took this trade on London on Monday, on the 7th. It was for a 3-3. I take my trades a 1-3 full volume. For now, I don't really try to take the long range shot of the trade to go all the way to the bottom. I just settle for the 1-3, but I take full volume. I don't do 1-3 yet. When I start taking trades that goes to 1-7, 1-10s, those are the only time I'll do the break, the 1-3, 50% partial, and let the rest run. But for now, I've been taking full volume at 1-3. This was a 6.3 stop loss. 7 pip is the most I will go on a stop loss. So this was still within my stop loss range. It covered the highs. I know price change character and broke structure. So I had enough confirmation to take this trade. So for some of you who are speaking about confidence, this is what I'm referring to. This is what you want to look for when it comes to confidence. You want to know that price did the two things that aligns with the confirmation. It changed character and it broke structure. And it left you a point of entry that makes sense, whether it's an unmitigated order block or it's an impulse candle like such that left a full body like this and it left you this OB to take the trade into. And it's just as important to know where you're taking your trade down to as well. Because when I took this 1-3, the reason I took it to what about here is because this was the low. This low right here led to a high, but it didn't break anything. So I knew price would violate this low. But there was another impulse candle, I believe, to the left on this side is why I took the trade to that impulse candle. Yeah, it was, I think it was on a 3-minute. On a 3-minute, I believe there was an impulse candle in here. So I took the trade to it. So that was for Monday. Let's go to Tuesday. And you'll also see certain trades where I did get stopped. So I can also show you where there's going to be moments where price don't go the direction, but it still gave you what you was looking for. This is Thursday of the previous week. Let me go to, okay. Same thing here. I'm just giving you another angle of the same setup that you want to look for, that I look for, I should say. Same way. What did price do? Let me just give you a clear idea here. Boom. So we've been retraced. Price is bullish right now. Internally is bullish. This low led to this high, broke this structure. This low led to this high, broke this structure. And price from this high. So this was the point, I like to call this the point of origin. This was the point of origin. This is where it reached. It did not break here. It did not break this point. Okay? But it reached here. Price from here that led to here came back to retest. It left a trend line. These are all the confluences that I build as I'm watching the price action. It left this trend line. This is all in Asia. Mind you, we're not trading Asia, but we're watching what's happening. It left this trend line. Another thing where you'll start to see over time is the 50% Asia range. These zones have validity. In the beginning, I never traded Asia range. If it's inside of Asia, I don't trade it. But now I've learned where we can identify Asia liquidity that price will react from. This low in Asia, on a 1 minute, for example, this low led to this high that broke this structure. And this high led to this low. Maybe if I mark it, it'll be easier for you guys to see. This low here led to this high. I'll mark it in a 1 minute. And this high led to this low. And this low led to this high that broke this structure. And this was the high that led to this overall low that broke this structure here. And this was the low that led to this overall high that broke this structure. So you can see when this high led to this low and broke this structure here, and this low led to this high, broke this structure. Well, this high led to this low, I'm sorry, not to the overall. This high led to this low, this led to this high led to this low, broke all of these structures here. So when price came back from here and broke this structure, even though this high was strong enough to take out this, and this, but somehow this low was able to push up and break this entire structure, that lets me know that there was strength here. And if you do your fib tool from the low to the top of Asia, which I believe is right about here, you'll see that the discount aligns right here. So this is another thing you want to pay attention to. When you see Asia, inside of Asia, it ranges, it breaks a structure. Now this high led to this low, this led to this high, broke another structure, and it's forming this trend line up here. Let's use your fib tool from the low of the Asia to the high point of the Asia and see where the 50%. Now that it's in time, you'll find the 50% within the inside of Asia where price is not going to come take Asia low. But let me carry on to what I was reading. Price came here, Frankfurt, I believe, yes, Frankfurt consolidation. Remember what I told you about the unintentional movement? It can happen in many different ways. Sometimes it's in a momentum direction. Another time it's in a form of consolidation. In this zone, we had range up here, all within this box. Unintentional movement happened here, as well as a consolidation. So there's a lot of liquidity here and a lot of liquidity here. So price did first, swept the low, consolidated again. Push up to sweep the highs of here, didn't quite close over it, consolidated again. So a lot of liquidity was being built here. But what I'm paying attention to is change of character, break of structure. Price is trying to go down. But it mitigated this zone of Asia. I didn't take this trade. Granted, it's not really my type of entry, but I didn't take this trade. I'm trading New York. New York comes at 9 o'clock. As you can see here, I see that price mitigated this mid-level of Asia. From this point, I see there's a consolidation zone here. Price push up. It changed character at this 5 minute. So it's important you always mark the highs and lows within this consolidation range. This was the high that led to this low. that broke the structure, that broke the bottom of the trend line, I mean the consolidation zone. And this was the low that led to this here high that swept this one. So that's my first change of character. Then this high led to this low, and this low led to this high that gave me this break of structure. Immediately, I know that my entry is within this zone. So I'll go to 3 minute. Why? Because I got a change of character and a break of structure. Oh, I forgot I was on the back time, so I gotta, there we go, it's right here. I think it's this one on this side. There we go. Was it this one? No, it wasn't this. Oh, there we go, right here. Okay, guys, what do you see again in this entry that I took? Similar, another volume candle being printed here. I think the better body of it was inside of the, I want to say the 5 minute is where it was more clear. Let me find the clear. Yeah, it was the 5 minute. Price just left a 5 minute OB. Yeah, it was a 5 minute OB right here. And you could take your trade right here. It gave you a change of character, gave you a break of structure. It did not mitigate any other supply before coming back to the zone. That gave it validity. So this overall zone here, I took the POI entry. On a 5 minute, it's here. Oh, there you go. I marked it on a 15 minute. See, on a 15 minute, it's a 6.69 stop loss. I could have marked the 5 minute and waited for price to give me a much shorter pip range, which would have been what? Right here to about right here, 1.6. That's unrealistic. So on the 15 minute, you always want to swim through different time frames also whenever you're finding your entry. So that way you can make sure you're not taking the most smallest stop loss and thinking that price is going to mitigate you. That's how sometimes you get left. Price don't even mitigate your zone because your stop loss was unrealistic. Look how it mitigated this 15 minute very softly and tapped. So this was the push. This 15 minute OB here that was left, price came in, tapped it, and shot back up. All I looked for was the very basic that I just showed you, a change of character and a break of structure after it had mitigated a zone that held significance, which was a low that led to a high that broke a structure, led to all this overall movement. Trace and mitigated it before my time zone, which was 9 o'clock New York time. Then I had a change of character and a break of structure. That confirms the push to at least come take this zone. And look where I took my TP. I didn't take it to the high of this overall zone here to say I'm going to sweep here. No, I just know that price wants to come sweep here. Why? Because this high mitigated this zone, changed character, broke structure. It did not come break this low, the point of origin. Remember, I marked it first. This point and this point. We're trading between these 2 points. So when price came back down and mitigated the premium level, I mean the discount level of this main push, and then gave me a change of character, break of structure, that confirms for me a continuation of that direction. Versus if price would have came down, induced this low or closed a body on this low, then I would have been looking for sales. Or let's say it didn't even mitigate this, it induced this zone, a wick, not a body, but just induced it by a wick. Then I could have said I could still look for a potential sell to come and close the rest. But the fact that it mitigated and changed character and broke structure, that's confirmed that it's gonna go back for a bit. Okay. And as you can see, after it did that, what did price do? Like we all know this week was very choppy. That's why you see a lot of consolidations was being marked. Okay, so let's go to another trade that happened. Was this one here? Let's see why we took this trade. Okay, that was another position. I think I removed the Oh yeah, so this was the others one that I mentioned to you guys about where price consolidates, it breaks above the high, it breaks the low, and it pushes and it comes back to that zone. It's going to mitigate the last order block that it left within the zone. Now, a better understanding will be here. It's another form of an impulse candle. The only difference is price gave you a little bit of a wick. It is a momentum candle, but it's just not as strong. The reason I took this buy, it was a risky one, but the reason I took it is because I wanted to see price induce this trend line and mitigate this zone here to push up. Why? Because this zone has significance. It was a low that led to a high that broke this here structure. And when price consolidated here, pushed up, this whole green box you see here that I've marked is my consolidation range for this time zone because price broke above. It hadn't broke underneath yet. So I waited for price to come and induce this zone here to finally break underneath this consolidation. And I took my entry right here to come up. But let's see why I took it. Let's go on a lower time frame. Let's go to a lower time frame. And I want to eventually get to some trades where I got stopped out so I could show you guys where sometimes the analysis is just one of them days where price just don't want to go your way. Okay, so this one here. Okay, so the mitigation happened. Boom, boom. Actually, this one was a lot. This trade was more complex than the basic trades. So I'm just gonna skip this one for now. Because once it swept the Asia low and mitigated that OB and I took that trade, it was more of a risky trade. Let's go over this one here. This was one of the trades that I really liked. Let me go to the 3 minute. I really liked this one because it was very textbook. And it's one of those trades that I try to find this setup most times. If I find this setup, I'm taking it 10 out of 10 times. Even if price don't go my way, I'm taking this setup 10 out of 10 times. And let me show you what it looks like. Boom. So right now we have the overall direction of the market is price came up here. It didn't break over Asia high. So the start of the session, Frankfurt came, did the same thing, gave us a build up right here. We had this whole area right here as a consolidation, an intentional movement high to fake like it was going up, didn't take Asia, sweat, gave us a change of character here, break of structure here. I'm not trading this session at that point. I'm still trading New York, but I like to go back and mark the previous session before New York session starts. We have a change of character here, a break of structure here that happened. And I see price came back up, tap, gave me a trend line, gave me another break of structure, broke this other main leg structure. Okay, so I'm confirmed so far. Asia low's taken, Asia high has not been taken. We have this trend line. Price left this zone right here, which would be unmitigated order block at the time because this high led to this low, broke this structure. Price consolidated here, broke low. Minute it broke low, I know it has to come back up because the high has not been taken yet. So I'm not interested in nothing. Plus, it's before my time frame. It's 7:57. So I'm just watching price action. It comes back up here, mitigate this high. Strong wick. Comes back down. Why am I not thinking, oh, this could be a sell? For one, it's before my time frame. I can't do anything about it. And for two, there's a whole trend line of 1, 2, 3, 4, 5, 6 taps that has happened. And now this almost be the 7th. So at that point, I know price is gonna fake down and push up. Like I said, it's before my time, so I'm just watching and anticipating what will happen. Granted, it did, smart money trap. Now I'm interested. Why? Because this whole area I marked as a retail support and resistance. Because look how many times this area has been respected. 1, 2, like it's over 8, 9 candles time that has been wick, price respected it. So I'm expecting this zone to eventually fail. So I wasn't not looking for sell. I'm looking for buy at this point because this was the main leg that pushed up here, broke this structure. Granted, price came from here first. This high led to this low, broke all the structures to the left. This low up there. This low led to this high, did not break here yet. But when all of this happened and this high came all the way down here and did not break this low, but instead started building a longer trend line. Let me move this because this looks like it's causing confusion. Price started building this long trend line, 1 tap, 2 tap. At that point, first thing that came to mind is if price tapping this big of a gap away, it's not coming to take this trend line yet. This is not your typical 1, 2, 3 or closer trend lines where price is going to come right back and induce it like one of these smaller trend lines or this one here. No, this is days worth of candle or sessions worth of space away from the trend line to come back, tap again, and push away. So I know, okay, this is not happening. So on top of that, I have a retail support and resistance, and I have this trend line that wasn't swept yet. I'm expecting buy. My bias is buy at this point because I already had a change of character, break of structure that happened here, and that point where this happened have not been broken yet. It hasn't been swept, induced, or nothing. So I'm still biased for buy until this low was to be taken. So what am I doing? I'm waiting for price to come to my entry here. There's a gap imbalance. There's an OB here. I'm waiting for something to happen. So what did I do? I went to the 1 minute. As I'm waiting, price is coming closer to my time zone. Where was my trade? Where are you? Where are you? Where did you go? Okay, yeah, it's around here. There we go. Where's the taps? Is this the trend line? No, this is current price action. This was this one. There we go. Okay, boom. This is why I say this is one of my favorite type of entries, is because it happens very often. It's a counter, but it's very easy to spot. When you see price, especially after it takes a few smart money traps and things like that, and it creates a structural high. It doesn't have to create the highest structure, but it broke a structure to the left. Especially in this case, it took this trend line liquidity, it swept, it induced this trend line, it broke this trend line, and it left a trend line at the bottom with a gap imbalance right here left to be mitigated. All I waited and saw was this high, low, high, low, high. Broke this high. This high led to this low, change character, break your structure. I love to see when it does it in one push. Happen where price, change character, comes up here, breaks structure internally, then breaks the left side structure. Remember what I told you guys early. I like the break of structures that happens from left side structures. I trust those a lot more versus the one that happened internally, like this. This highlight to this low, then it retrade, then this highlight to this low, then you get your first breakup structure here. Then this one to this one, then another one. It's so far from the next low, which was way down here for a structure to be broken. I don't really like those because then I have to wait for price to return all the way back up, and a lot can happen between them. But this right here, change character and break structure in one strong push, and this was a low that led to a high that broke a structure. What do you see, guys? The same thing we've been talking about. Impulse candle. You see me mark it. Impulse candle. A strong body, no wick, candle before it. I marked it. And this is what I was talking about earlier when I said I started marking out some of the candles. Granted, I still took my stop loss all the way up to the high. Why? Because it's a 4.4 pip. Had I made it right here, it would have been 2.4 pip. It would have been a 1 to 6. But instead, I like my 1 to 3, full TP. I don't have to worry about taking partials. I just take it like this. And on top of that, I wanted to just come sweep the trend line. Because my bias was buys. Remember, all of this,
Yeah. Sorry, just a quick question.
yes,
You know where you said you look for the BOS at the left side,
correct.
just the price action you were showing. So for us to take the entry, the sell entry that you took, as soon as it takes the low that led to the high on the left that caused BOS, and then we see change of character, we are valid to take the sell entry.
Correct. When price is doing it, for example, in this case, it took liquidities before it. It took liquidity, the smart money trap. It took the liquidity of this equal high. That's part of a lot of things goes into the confirmations as well. You have to look at the liquidity that's being taken. It's like you you were tired and you drank a lot of water. Now you're hydrated. You drink a lot of Red Bull. You have now energy to go the other way. In this case, the equal high was one form of Red Bull. The smart money trap was a second Red Bull. The trendline liquidity was 3 Red Bulls that price just drank. And then it gave me a change of character, breakup structure, and one strong push like this.
Okay.
That is enough confirmation that, not to say, oh, now all of a sudden we're gonna be going bearish for the whole day and take this low all of a sudden. No, because this is the low that led to all of this drinking of Red Bulls. You know what I mean?
Yeah.
So I can't expect that this low is now gonna all of a sudden get swept because this is where it originated from. So now all I can say is price taking this change of character breakup structure is simply to come back and retest the level of liquidity that was left here for it to push back up. And let's see, I think the fib aligned with it as well. Yeah, on the fib right here. It was in the discount, right here inside of the discount zone. So you'll know that this right here, it was an imbalance. Price will take. Now you could have put the holes, marked the whole zone, which I did. As you can see, I marked the imbalance all the way to the bottom of the OB, just in case price didn't just respect the imbalance and it came deeper, because the imbalance was only like one, or I think like 0.5 or 1 pip. Yeah, 1.9 pip. So something like that, you take it with the order block. You don't just take it by itself.
Yeah.
And this is what we got. Price came, so it was a ping pong trade. So price came, hit my TP 1 to 3.5, took it to just sweep the trend line. It did a straight wick. The minute it wicked, because accumulated and pushed up again. And I took this one the same way, just to what, break the next structure, because this high, this low led to this high, broke these structures. Price came back, retest, now to come break the next structure. I wasn't trying to take it into the retail supported resistance and expect price to break it yet. A lot of time you want to try to be as humble as possible with the trade. I like to just, at this stage of my journey in trading, I like to just focus on catching 1 to 3. If I can consistently catch 1 to 3s, I would have convinced myself that I know how to spot the 1 to 3s. Then I can evolve to the next phase. Okay, let me look for 1 to 6, 1 to 10. There are times it is obvious, more obvious to see the 1 to 3, 1 to 6, 1 to 10, 1 to 12. There are trades you'll see where I have some of these when we continue that goes 1 to 12. But I still humbly take the 1 to 3 simply because if that's going to be the case, price will give me another reaction. But anyways, right after price took me out, hit my TP, what did we get? A retracement of a retest of that same imbalance. And then price pushed up again and left us another smart money trap on this side. But this really was a smart money trap because price came up here and tapped supply. So all of this was invalid. Now, I want to show you one that I got stopped out on. This was right here. After it mitigated, price came down. This is all during Asia. So obviously we're not trading this, but I like to mark it out to see what price been doing. I like to see where all the Red Bull, for example, that price has been drinking, right? So price took a smart money trap here. Boom. So to me, that's the first level of liquidity. Came back up, mitigated this zone, accumulated again, took the high, took the low. I was expecting the fact that price took the low and mitigated this low here, this impulse candle. And as you can see, let me make sure you see why it's an impulse candle. Full body, right? Full body, no wicks at the top. And this right here was the candle before it. But being that it was so small, I said, let me take the entire zone, the bottom of the zone to the top of the zone. And it was a low that led to a high that broke this here structure. So I thought it would have validity. But what happened? Price came, reacted from it. It gave me everything that I analyzed. But what I didn't pay attention to is Asia high wasn't taken, Asia low wasn't taken. That's danger zone. When Asia high or Asia low is not taken, beware not to just take the trade because you don't know which side of the liquidity price is taking yet. It's almost as if it's still accumulating, trying to figure out its direction. So what did I do? I took the trade. Price came, mitigated me in. I took it for a 1 to 9. Had I focused, this was me outside of my discipline. Had I focused to my 1 to 3 guys, would not hit my CP? Would not hit my TP quickly? This is a 1 to 3. covering the zone with a 1 pip stop loss. I hit my TP already. This is the reason why I say the more modest you are with the trades, the more likely you will have TPs hit because
Where was you aiming?
I infer this equal high here. I aim for this equal high. I aim for the first line of liquidity. There's two equal high. There's one here and there's another one here. I wanted to see price, and there's a trend line right here. I wanted to see price come and sweep this equal high or induced it before continuing down because it did mitigate demand supply first. When it came back up here, it mitigated and it pushed down and broke structure. So I knew that this high had validity because it broke the structure. But when it broke structure and came and mitigated this zone, this was the first, it already took this area out, which was a smart money trap. So once we tapped in here, because this was a low that led to a high that broke a structure, I felt had validity. Price tapped it. It gave me a 1 to 7. And I didn't close. I allowed price to keep running because I was so close to TP. I said, let me just let the 1 to 9 continue. And guess what happened? Price reversed on me. Then it gave me a second chance to get out. It gave me another chance to get out of the trade. I was so sold on the fact that we have to take this equal high. Look, it did it again. This time even higher. Almost 1 to 8. I stayed in the trade. Buyers came back and took me out. So what did I learn from that? To stick to my rules for a reason. I told myself that I was going to focus on taking 1 to 3s until I'm up a certain percentage on my accounts. Once I've reached a certain percentage, have built a big enough buffer, then I will start aiming for longer range trades. But when you're very modest with your trades and you take it little by little, you will see a lot more returns. Now, nothing against anyone who takes it further. I mean, if you see further opportunity, you can just stomach that. You do so. But for me, this was a trade that I got stopped out. Now let's go to this recent one here. And this right here is called an aggressive entry. That's another thing. I think I have it written there we go. These are the types of entries, guys. This was from when we were up in Dubai. You really introduced us to. So there's the aggressive entry, is the unintentional movement that typically happens. That's what I was telling you earlier, the unintentional movement. It could be pro trend and it could be counter direction. The unintentional movement could be via consolidation. So look for the POI above the consolidation zone. So in sense where, let's say, where's Frankfurt?
Where do you have that written on that pink box?
What's that in here?
Yeah.
So this is some confluences that I write during certain trades. Let me see. I'm gonna show you the one that I took. Yeah, and this one here, I marked. Granted, I didn't take the trade. I put the signal. I'm looking for internal buys. Then I write what the pro trend is, and I have the rules as to what I'm waiting for. I say wait for price to sweep Asia high, and change character, break structure, and I say why not? Like why I wouldn't take that trade. The reason I wouldn't take the trade is because there's a trend line below. So in this case, why I wouldn't take this buy yet? Because there's a trend line below that this price could come sweep. This is why I wouldn't take this one right here. The reason I said both sides of Asia not yet taken, the low and the high was not yet taken. And that was pretty much why I wouldn't take the trade. Then these were the confluences why I would take the trade. And validation model, price had already tapped. Which one was this for? I think this was for this trade. I think it was for this trade. Yeah. I said, yep, invalidation model, price retraced to the point of origin and mitigated, which was this right here. I said price is building a huge trend line, which was this right here that I showed you guys, 1 tap, 2 tap. So this is why I would take the buy. Remember what I said as what my signal is, internal buys. I'm taking internal buys, even though the approach trend was bears, I was looking for internal buys. And I said price is building a huge trend line. And I also put levels of liquidity above Asia highs plus retail support and resistance, which was this. The levels of liquidity, I have the Asia highs right here. I have, was it an equal high anywhere? Pretty much this retail support and resistance, so many taps. So this is the reason why I was looking for buys. So granted, this is when I took this trade. That was for this trade here. That was my confluence list for this sell I took to come to this buy. But this was written for the buy only. But the sell I took to my buy because it was so obvious. When price change character broke structure, that was the one we just saw. It was so obvious as a sell, impulse candle, took it to the zone, swept this trend line, impulse, tapped me back in, and then took off. So that was just that one. Where we at right here? What day is this? Is the time? Same thing. Unintentional movement. Asia high not taken, Asia low's taken. Price gave us what? A breakup structure. It swept this low, broke structure, consolidated here, came down, broke this structure to the left and this structure, another breakup structure. When anytime you see these little close by breaks of structures, be aware of them because sometimes they end up being liquidity. In this case, this one wasn't because the ones that was liquidity was these two right here because it was pretty much in a ranging area right here. And when you mark your ranging areas, guys, you want to mark it on the wicks that are tapping. You don't want to mark it like this and say this is ranging, but the wicks are way up here. You want to mark it right at the taps where it taps multiple times. You got 1, 2, 3, 4. That's enough to know that was a low of it. 1, 2, 3. That's enough to mark that this was a high of it. So that way, if there's ever a situation where price wicks, for example, above, you know that it's already cleared the high. So that's why you want to find the most consistent taps. So this right here, accumulated price came, did the same. It broke under, but it did the same thing here. Build up, trend line, liquidity. So this is me coming into New York session. I have two levels of liquidity in front of me, and I have this whole unintentional movement in my eyes from London. Price came up, swept, impulse candle. Same thing here. That's why I said right here on the, where is it? The ULE, the unintentional movement, look for the POI above the consolidation zone. What did we have? Consolidation zone, the high wasn't mitigated. This one right here, the low wasn't mitigated. So we know that the high of this zone has to get swept and the low of this zone got to get swept. And all price has been doing is showing us its hands as bearish, 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 bearish. So keep in mind, I kept in mind that bears has been in control since here. This high led to this low led to this high. I mean to this high. This high led to this low led to this high led to this low, change character, broke structure. Granted, this is Asia, so we're not trading this, but it did the same thing we were just talking about. It came from this one leg, push all the way down, broke the change of character and the structure, all at one in one move, all the way down here. Came back, found a impulse candle somewhere and mitigated and pushed under. What happened in the consolidation zone? The highs were taken, the lows were taken. Price came back and mitigated what? A POI that was created right within the consolidation zone. Typical. Afterwards, we had the same unintentional movement here. We had a trend line. We had this push up like it was trying to go up. It did not break this high. Came back down. London showed up, swept it. Gave us another unintentional movement, build up again, mitigated above. Remember, the zone is right above the consolidation zone. Found it, broke down under, change of character, break of structure once again. Retrace, built a trend line, but price is not chasing this high right now because it's been bears this whole control. Asia low is what's in danger. Price came back down, build up, swept this high, push back down, give us another breakup structure. This is all before my trading zone. I marked this, but I wasn't in it. Wait, was I in this session? Oh yeah, this is the one that I lost. I took the loss on that I showed you guys. This was the one, yes. But coming to this session here in New York, this is why I was able to make up from this loss here. This was in the same day. We had the same consolidation, and this was the impulse candle, guys. So that way you guys can see it clearly. Right now on the 1 minute, it doesn't look as such, but on the 3 minute, it does. Right here. Impulse candle. What do we have here? Let me move this. What do you have? Full body, the candle before it. Remember earlier you were asking me about the candle respecting the body and flying away? It's always the one before it. Because you could look at this one. So one could say this is an impulse candle too, right? Because look, full body. And there's the one before it. But did it lead to any break of structure? Not at all. This full body didn't lead to this break of structure at all. But it did. But this one led to the breakup structure of this and this and this. You see it? Hope you guys see the difference in the impulse candles. It has to lead to a breakup.
Yeah, yeah.
It has
Yeah.
to. Yeah, go ahead.
Yeah, now we understand when you mean like impulse candle, like the reason that we should consider them like it's supposed to break structure.
Yeah, it has to lead to a breakup structure.
Break of
Correct.
structure. Thank
Yeah,
you.
yeah. If it does, then you know it has validity. And what did I do? I took that trade. It was a 2.5 pip stop loss, price mitigated, took it to a 1 to 9, made that back. Even though I broke my rule, I didn't do 1 to 3, but I still took it and it gave me that. Granted, price dumped even more from there, but I was content because I just took it to the next level of liquidity, which was this low. So I don't take it to the actual bottom of the low. I always take it to the gap or the OB, the top of the OB. In this case, it was right here at the top of this zone right here. Actually, I think I had it even higher, but I just moved this further. But it was around here. I took it because this was a low that led to a high. This low right here led to this high and broke this internal structure. You know what I mean? But because this load led to this overall high and it didn't break this here structure, I know that this would be the smart money trap. In some cases, plus it had this trend line and we had already broke underneath the trend line. So I kept that. This was mostly EU, and this was the last trade that I took. This was done, was this Friday? Yeah, this was a Friday trade, impulse candle as well. Let's go to 1 minute. Okay, boom, 1 minute. Now, this one right here, price induced this zone, the smart money trap, price induced it. After price induced it, it came up here. It didn't give me the clear change of character breakup structure that I normally look for. This one right here is a bit more risky. It's more of a continuation trade. So because price left, price didn't leave any relevant zones, no 3-minute OB, no 1 minute OB. It didn't leave me anything that was clear. Even the impulse candles didn't look quite clear on the 3-minute, but on the 1 minute, or was it 5 minute? Let me see. Yeah, 1 minute is where I found this possible entry. It was risky. It could have taken me out, but I took it. Oh, actually, I took this trade, but price didn't tap me in. Yes, that's what happened on Friday. Price did not tap me into this trade. Margin came about right here, the level of the margin, and it turned away. I just didn't tap me in, and it happens. But this was my impulse candle in this case. Full body, very minimal wick, full body, and then this was the candle before it. It led to the breakup structure from this zone. This was a high that led to this low, broke this structure. This was the high that led to this low, broke this structure. Let me go back here. I'll mark it even better for you to see. Oh, wait, we already have it marked. There you go. So you can get a clear understanding of this high led to this low, change character, broke structure. This low led to this high led to this low right here, because this low right here swept this low. So it has validity. This low led to this high, causing this more trend line, and this high led to this low and broke this structure and these structures to the left. So when price came, induced this smart money trap, pushed up here and broke above this structure here, that for me, knowing that there's no other entry here, there's no order block or anything, all I looked for was the next level of impulse. The next, where was the price? Where was the injection of the momentum? And it was right here. And I also, because even when you do the fib, it didn't align with it. So for me, there was nothing in here. I did the fib, I marked what I could see. There was nothing here for me to see that this trade was to be anything lower. So I took the risk. I marked this zone right here, assuming that this would be the point of reaction, and price came and just didn't tap me. But I knew that I wanted to sell. I didn't look for this trade simply to try to buy price up. No, I took this trade as a counter. But my overall direction is what we was just talking about. In one push, what did price do? From this mitigation, straight down, change character, broke structure, and induced this low. Had it tapped here and respected the zone, then I would say this right here would fail. But because it induced this zone, that validates the sell. But it was the end of the session, so that's why I didn't take this sell here. It was already like, it was at around 1140 something, so I didn't take it. But granted, I could have taken it and sold from this high to the bottom to the impulse candle just to sweep this area, and it would have hit TP or ticker 1 to 3. But this was my sell zone. This is where I was waiting to sell from. And I marked the impulse candle, which you'll see once again, but this will be on a 3-minute. But before I show you this one, just to show you why, despite this trade, this was just me taking a counter to the trade that I wanted to take, which was here. I wanted to sell because price came, changed character, broke structure, all in one move. Remember what I said? One of the trades I really like to take is when it does it in one straight drop and its structures from the left side. 1, 2. These were created before. It wasn't this low, this high, this low. Then I got my first breakup structure. No, it was from the left side. Once this happened, it drank this Red Bull. It broke these structures. It took this trend line. This is a lot of Red Bull prices drop. And it took this smart money trade. That's 1, 2, 3, 4, 5 levels of liquidity already taken. 6. That's a lot of Red Bull. So for me, when price retraced back here, I know it wants to come back up here to mitigate so it could fly off. So I missed this trade, but let me show you the impulse candle that it left behind to confirm to me that this was going to be the zone right here. Another thing, another one, impulse candle, guys. Impulse candle right there. This area right here, you see the impulse candle. No, very minimal wick, small, strong body. And it led to a what? A breakup structure. It didn't just come down and start. It led to a change of character and a breakup structure. So what did price do when it got here? Took off. Accumulated because it was outside of the time frame. Because after 12, things die out. London is out of the market. A lot of things change. But this was a valid trade. And I believe I left my home anyways at that time because it was too close to the time frame and I had some important things to do. But I would have taken it from right here. And my 1 to 3 would have been right here. So I would have hit TP 1 to 3 right about here. And we would have been out of the market. Full volume, 1 to 3. Any questions so far on these? Any questions on like the impulse candle, guys? Any question on if you have one that comes to your mind, feel free to ask me. So I'll go to the GU for those of you who do focus on GU. This was a trade that I lost on GU as well. This was yesterday. I'm going to show you some of the errors that I make. It's not really errors, but price just not going with my overall direction. And this is another trade setup that I like as well. What do you see here? This is the point that I should have not missed. Right here was the biggest telltale of the moment. This little zone right here. Can you tell me why, or does anyone know why this right here was the important factor as to what I should have known that this buy wasn't gonna last? Can you guys still hear me?
Yeah, we can hear you. We can hear you.
Okay, I'm gonna be very quickly then.
Yeah, we can hear you, bro.
The reason this zone right here was the significance of this trade failing is price told me exactly what it was doing. Right here, I had a break of structure. What do we know about break of structure? If price breaks structure, it's going to retrace in order to continue. But because for me, price mitigated a 4-hour zone. This was a 4-hour zone that we just tapped into. A 4-hour impulse candle. Oh, no, I'm sorry. It wasn't 4 hours. I think it was a 1 hour. Yes, a 1-hour impulse candle. As you can see, impulse, and it led to a break of structure. It was this low, led to this high, broke structure. I didn't mark this one as impulse because look at the size of the previous candle. There's more information within this. This one here, it was an indecision candle, and then the impulse candle was injected. It broke the structure. So I selected this zone. On top of that, we had consolidation here, and this low wasn't taken. Remember what we said in the note? Your POI, look for it above or below the consolidation zone. So I know that this was the consolidation zone. This low wasn't yet taken. So I wanted to see this be the POI that price push up from. So what happened? Price came here, and let me go back to now that time frame. It told me literally that it was gonna go down further. But I knew that there was gonna be a retracement because of the change of character breakup structures. But this right here was all the reason that I should have known. Let me not even enter the trade, because this zone is so big that price can come and mitigate deeper before it gives the actual reaction. So what happened? I somewhat disregarded that information. So here's what I got. Change of character. We had a breakup structure, then price came up. This low led to this high, shock, change of character. We retraced. This low led to this high, break of structure. Price left me a beautiful, unmitigated order block right here. But it's before my time zone. It mitigated it right here slightly. Accumulated, then it came down here and swept, mitigated. I didn't enter this trade because it was so early on into the session. It was only 9:16. And I was kind of iffy about the zone because it was so obvious. I'm like, ain't no way price is gonna leave this obvious 1 minute OB looking like this here. It changed character so easily, obvious, broke structure. It didn't mitigate this zone. This just looks too good to be true. So I didn't jump into it. I said, I want to see this high get broken before I believe in this zone right here. So what did price do? It pushed up, it broke this high. It gave me 1, 2, 3, 4 confirmations for me to think this buy is valid. Granted, the buy was valid, but just not to where I wanted to take it to. I tried to take it to the second level of liquidity, which was what? This level of impulse candle. If you go to the 3-minute, you'll see it better. I wanted to take it to this level of impulse candle right here. Right here. To this impulse candle. Because of this full body that broke a structure. So I disregard this OB here, which is my fault because I was thinking too much of the trade, trying to catch a, what was it? A 1 to, not 21, what was it? A 1 to, oh yeah, it was a 1 to 3, nothing crazy. But my overall is you always want to TP at the first line of liquidity, which is what? This high led to this low, broke structure. This high led to this low, broke structure. Though this high mitigated this zone right here to push into this mitigation, I expected this one to be swept. But this one right here that led to this low, this high that led to this low that broke this structure is still valid. On top of that, price hadn't even mitigated this OB yet. So I missed this entire first stop. And look at the range of it. It's a 1.8. Why? Because after price gave me this 1, 2, 3, 4 confirmation, I look to see where could price retrace to, especially after it wicked right here. I'm looking for where could the retracement be. And the retracement, I saw an imbalance right here between this OB. And I looked at the price range tool. From this high to this low, it's only a 5.5 pip stop loss. But for the sake of discussion, I say, you know what? I'm going to cover these highs and at least 50% of this zone that I did not trust, just in case price comes down and induce this low as well, and then push up. And what happened? It took me out. There was no need for me to be in this trade. For one, the story was already told that this break of structure, even though it was inside of this demand zone, this impulse candle zone, price told me that it's going to mitigate deeper. Had this been a wick, guys, right here, this was a wick. Let's say this was just a wick, not a body. Then this trade would have had way more validity. Price would have blown through all of this. But because it closed the body, it lets us know that it wants to come further. But for me, because that close of a body led to a change of character and a break of structure 2, 3 times, I knew that yes, price wants to come down here, but it's probably going to happen at this premium. Why? Because the fib, which was this high that led to this low that broke this structure, lets me know that the premium was right here. So I'm expecting price to come fill up this zone here and then to sell off to come deeper in here. But as you can see, price didn't have to come all the way up to this one because there was another breakup structure that happened here that hasn't been mitigated. And this one only mitigated the imbalance. That's why it's important sometimes Did you guys hear him?
Oh no, I thought it was my connection.
Did you guys hear him?
No, we can't hear him. Can you hear him?
Okay, I'll continue. Oh, I can't hear you guys right now, but I'll continue to break it down on this section here. And once this laptop cuts back on, I will I'll turn back the this so I can see you guys and answer your questions. So that's nice. We can have proper, you know, so just to finish off this trade right here. As you can see, when price came and it was literally was going to give me a 1 to 4, 1 to 8. If I was to take it to the first line of liquidity, there would have been no reason for me to even enter this trade because who's going to take it on the thing? However, no reason for 1 to 3 or more. So this would have told me this trade is not even worth taking. If anything, I should have been looking for the sell. Why? Because price broke structure here. I should be looking for the point of retracement because price has to change character break structures in order to retrace back to the zone that it wants to sell off from. Just like we saw it happen from the previous one that I marked from EU, where price retraced back to my zone and gave me a ping pong shape to continue pushing. So that was for the GU that I showed that I took and I lost the yesterday, Friday. This was another trade I took on. This was also on GU. This one hit stop loss as well. Now I'm going to show you similar, same thing. Mid level of Asia. This low led to this high. We broke this overall structure. Trend line liquidity built. Unintentional movement. This is all during London session. Unintentional movement, price came down, swept the unintentional movement to move, it came down and mitigated. Mitigated this 5 minute POI for me, felt like this was valid. Price mitigated this 5 minute POI, I included the imbalance, price tapped, shot up, fell to break and came back and took me out. Now I'm thinking, why did price fail this zone? Especially because this was a low that led to a high, broke the structure. This high led to this low, it didn't break this. This high led to this low, it still didn't break this. So I'm thinking, why would this zone not hold? Well, here's the reason. This big old trend line has been built. Asia low has not yet been taken. Price had already came and induced this previous high to the left, and this overall high where the momentum started from, this leg and this leg, the main push, price didn't retrace to mitigate this main push. Literally, high, low, came back here, swept this high, yeah, this trend line, and then came down and swept this trend line and this equal low. So there was enough liquidity underneath the zone that price was more attracted to than to come to this zone here. On top of that, when I look to the left, what has price been doing? Break of structure, break of structure, break of structure. It's been a bearish momentum all the way through. Look at this left, on the left side. Break of structure, break of structure, break of structure, break of structure. We've been breaking structure to the downside. So why will I automatically expect now that we're going to be coming from here? Even though I wasn't trying to take it all the way up here, just for that little push I was trying to take the trade to, price made it very clear that's not who is in control. The sellers are still in control. This was a retracement. This was an extreme zone. Um, some of the other guys they did take this trade. Really, I think Millennial this trade, this sell. For me, it was a very, very tough sell. I didn't see why price would come and went to do this zone, but he did mark it as an extreme zone, which was
which was with this overall immediate, but this was a high that led to a low that broke structure. This high right here led to this low that changed character and broke structure. Yes, price did come back and mitigate right here at 10 and 9. It came back, but it only mitigated 50% of them. So there's still more liquidity within that zone. That price came back and mitigated. That's what he went for. He said he went for that trade and he worked out. So that was a trade that hit my stop loss. But as you can see, most of the time when my stop loss are hit, it's not just price coming in and blowing through my zone. I get the reaction that I'm expecting. It's usually in a situation where price told me a little bit more tells that I didn't factor. Like in this case, like I showed you, was the trend line and the equal load that was lying into that zone that price was more attracted to that I expected to happen later on in this situation. I don't know what the reason this was in GU. This is a trade that I took. This one hit TP. It's the good old favorite. So you guys, if you can really memorize this entry, you're gonna love this. I'm telling you. What do you see? The exact same setup that I've been telling you. Change of character, breaker structure to the left, all in one push. I love these. All in one push. I'm taking the sell. And what was it? Impulse candle. Impulse candle once again, right here. What do we got? Impulse candle right here. A full body momentum candle that led to a break of structure. And what did price do? Come back and respected the candle before it. It mitigated this candle right here and respected it. So what do I do? I take it from the low of the zone to the high of the zone. It was only a 4.3 pip stop loss. 401 to 3. The TP, fly back up for a retest. You could have re-entered here. Anyone who took it because this was the shade of character, another break of structure, and it retest to push down again. Your entry would have been at this OD here. This was a high, that led to a low, that broke structure. And price left through this OD right here. And it's better than it to do. It's not going to be a retest. But I didn't take it because it's outside of the time zone. It's after 12. So enter the trade around 11:30. By 11:50, you're done. You get 1 and 3. So if you can remember this setup, I'm telling you, you will love it. This setup right here is beautiful. I love that type of setup. Okay, let me see if there's another trade that I took. Okay, here's another one here. All right, so this is another one. It's similar, but it's not the same pattern. So I'll check video. I wish the laptop would have told me why for the censorship. Okay. So here's this in this case right here, it was just a matter of decisional or extreme. You had this extreme zone here, price came down, came up, this high led to this low led to this high, swept and put the body. This overall high led to this low, change of character, didn't break structure yet. Then this high retracement led to this low, finally gave us the break of structure. When price came up here, swept. Gave us this accumulation going on here. This is all outside of our time window. And finally, gave us this huge drop, but did not mitigate this demand. This demand was not mitigated. This was a low that led to this high that built these structures that change character. So this is why it's a demand. If price would have tapped here, then this would have been validated this huge right here. Because price didn't tap it, that for me was significant enough to look for this retracement. And price came in and tapped into this extreme zone. So this would have been a decisional, but I marked as a smart money trap because of this consolidation zone. Price consolidated all through here. So the high was not yet taken. The low was, but the high was taken the low. We built structure 2 times. We changed character until the middle. This was the last part of supply that is time. So I took it as a progressive entry. So I didn't wait for a change of character. This is one right here. An aggressive entry. That's the entry I took. The minute I had already had my limit set, so once price came, tap, flew on. That's all I took. Tap, fly out. I took it for 1.7. Now, It began as a 1-3. The only reason why I ended up moving it to 1-7, I'll show you guys. My first stop loss was right. My first two people right here. When we first took the trade. I took the trade to stop right here. But as price was approaching this zone, look how strong the momentum of those bearish candles were. Once I seen that, I'm like, there's no way price is gonna come here, sweep this low, because this was a little into this high level of the structure. This is why this was also my first stop. This was also on a 3-7, and this was another low that led to a high level of structure. So for me, price could have easily tapped any of these to come mitigate or violate this zone, but there's still more liquidity above. So from that extreme. But once I seen this, candlestick anatomy tells us price is not going to stop no time soon. And what I look for is at this point, where's the next level of liquidity? I realized all of this was unintentional movement. All of this was unintentional movement because look, right above it is another range in the zone. And price had not broke underneath the bottom of this range. So that's enough liquidity. This unintentional movement, because of what? Close break of structure that leads. When I see them, I immediately assume price is going to sweep. There's also a trend line. And then we have this accumulation. So I said, okay, I'm going to take my stop loss a little further down. I'm going to stretch this a little further down and see how far price is going to go. So I took it to the smart money trap because I knew that this was all part of this unintentional movement and price swept the slope. And then after the smart money trap, what did price do? Hit this impulse candle. Those candles are dead with that. I'm telling you, you're gonna start seeing them everywhere. So, impulse candle. Price tap this impulse candle, we turn back. And so it created this trend line. Now, what was that? See that? Right after it took the smart money trap, the next form of liquidity for it to retrace from was this impulse candle. They might have been thinking, okay, price might come all the way down to the bottom. It might come all the way down here to take this trend line or sweep this, or perhaps price would come all the way to this zone here to mitigate. But you have to do that. Sometimes what you have to do is take your TP to the next level of liquidity. The next level of liquidity that's in front of you. And as long as you're able to get your RR, whether that's a 1-3, 1-4, 1-5, whatever you're comfortable with shooting for, just take your TP to the next level of liquidity that gives you that. Because 9 out of 10 times, price is going to give you a reaction from that point of liquidity. Whether it's a reaction to retrace and continue, that's fine. At least you've already made your money and you're out of that trade. And you can just now watch as it continues and catch it the next day for another opportunity. But as you see, in post candle, granted, it didn't lead to a break of structure to the left, but it led to the momentum that came and swept all these consolidations on. So price still was able to react from it. All right, so that was that trade. We're gonna give I got stopped out of this one. That was me being greedy. I expected after the price to the smart money trap, tap this impulse, and this impulse candle would still fell. So I put a trade right here. This was another underscore. So I'm just like you guys. Sometimes I do slip up. I want you to know that. Sometimes I do get out of my discipline. I make those impulsive decisions, but then I learn from them. But the thing about it is, the way you're gonna build your confidence is by mastering taking losses. You have to take losses to kind of start knowing what works and what doesn't. So why did I take this one? Impulse candle, strong body. It led to the break of this structure. So I figured this one right here would not fold as much because look how big the body was of the lid. Yes, it was an impulse candle. It led to this overall break of this zone here. But I'm like, you know what? This momentum down, we've already mitigated the extreme. What does the validation model tell me? This high, that's this low, it shouldn't validate it. What happened? Price came and respected it. Push back, so it took me out. So that's why I lost to this loss. It was a one, it was actually a 1-2 something, but I shouldn't have been in that shit. That was just me being greedy. I had already made a 1-3. I tried to go for an extra 2K to add on top of it for that day, and price took like 2 out of it. I mean, took the K out of it. So that happens. One more I'll show. I'm seeing that this computer has not cut back on yet. So what I'm going to do is jump on the Zoom call from my phone as well. That way I can hear you guys, so I can answer any final questions, and then we can comments this.
Okay. See my camera, make sure my camera is good. Can you guys hear me? Can someone say something so I can see if I can hear you?
Yeah, we can hear you.
Perfect. I can hear you, Aisha, so that's good. I don't know why the camera's not working, but it's okay. As long as I can hear you guys.
It is working. We can see you.
Can hear you, bro. Okay, perfect. All right, perfect. So I'll look for one more trade example. Hopefully, the next one I see is one of my favorite ones, so you guys can see it some more because I just love those types of setups. This one doesn't look like it already, I could tell. Okay, so what happened here? We have breaker structures, breaker structures, breaker structure. Price reaches a high time frame zone. This looks like probably one of my dailies or 4 hours or weeklies. So price came down, change of character, up, break structure, broke structure, came all the way down, gave me this trend line, swept the trend line, and then I had an internal change of character, came back down, up, gave me a break of structure early into the session. So this was trading New York. Early into the session, price gave me this entry, which was an impulse candle as well as an order block right here. So I took this 1 and 3 trade to this level of liquidity because this was a high that led to a low that broke the structure and swept this trend line. So I expected price to give me a reaction here, which it did. Once it tapped here, it gave us 2 bearish momentum and then it continued up. So that was a very simple trade. After I took that one, I took another opportunity right here simply because I seen price came and induced this high, mitigated this one, but then this high right here, this overall zone had not been mitigated. And I also realized that price did not break this low. So I know that this high that was coming down to this low simply was mitigating to push up and cause a new break of structure. So when price came and mitigated this OB here, consolidation, body here. We had a change of characters, breakup structures. And then from the top side, we had the same. Oh, that's why it's not on the 1 minute. I was wondering why the candles are so tight. Let's get back to that session. I like to show you guys these on a 1 minute because it looks a lot more detailed. And in this market, you want to be as detailed as possible because that's when you can tell the story for real. Okay, this was the one that I lost in, and I think it's right here. I'm not sure why it's loading so slow. Okay, so price is not trying to give us what we need. So these are not the trade. Oh yes, right here. There we go. So this one right here, as I mentioned, this was my reentry. On a 1 minute, it's a little bit more details. You'll see on a 1 minute, but I don't want to waste time trying to do that. Prices act crazy. But there was an internal change of character here, internal break of structure. I actually was gonna take a sell if price would have came back here first because they did it all in one leg, like how I like to see. But instead, it came down and induced this zone here. So instead, I took the buy at the top of it, took the buy instead up to just a 1 and 3. Always, I'm just chasing my 1 and 3s. I'm not looking too much for more. And I only took it to the 1 and 3 because, like I told you guys, impulse candle, price could easily respect this and push further down. So I just took the 1 and 3. Um, Give you one more. And I saw something that looked like one of my favorite ones. Yeah, but I would need to be on a 1 minute so you could really see it more. This one right here was another impulse candle entry. Price, accumulate, change of character, broke structure. Gave me another break of structure here. Then it changed character, break structure to the bottom. Took the smart money trap. It left the impulse candle right here. So I took it from obviously the body to the lower, covered the lows. On the 1 minute, it's a lot more clear of the zone, and it took me up for a 127 on this one. But yeah, that's so far. That's for the call, guys. Just as far as entries that I wanted to cover. This last one right here, I'll try to show you. We have a low led to a high, high led to this low, didn't break this structure. This low led to this high. Prices, the control is in buyer still. So when price came back down to mitigate, after we've already mitigated this, let me see how far back it'll go. So it's important to always look to the left. It's important to see where price came from the left. But this was a zone from the left that price came down and mitigated, that pushed back up and fell to break on the second test and pushed up again. I look for the entry of the impulse candle here. On the 1 minute, it's an impulse candle that lies right in this zone. I didn't enter here. I just marked the mitigation. When price came up here, it gave this change of character here, break of structure here, all this. On the 1 minute, the structure is there. Change of character happening here, break of structure happening here. Price came back, retest. The impulse candle was within this area. I took that for the buy up. And this one was to the equal high for a one. Oh, this one I didn't take. I cut this one short. I didn't take it all the way to 134. I actually took it to this. What was it? I think it was. I took it just, yeah, I took it to this high. Yeah, I had to get to this high here. But as later on I realized price ran up for way more into this equal high that I should have taken it to. But granted, I'm not even taking these types of trade. I probably would have FOMO'd out and got out of the trade way before it reached 134 because I would have feared that price would have reversed. But all the confluences were there. There's a trend line right here built up. There's equal highs above that price needs to sweep. But that comes with time. The more you're in the market, the more you're trading, the more you're doing um, these analysis, looking for your setups, being more strict with your entries. That's the only thing I would suggest, guys, is try to be very strict with your entries. Try to um, wait for confirmations if you're not sure. And if it looks too obvious, granted, it might be too obvious. It might be too easy. I like to find a trade that doesn't seem probable, like you really said, the Sierra Leone, where price is hiding somewhere. That's what the impulse candle is for me. It's a zone where everyone is looking for the obvious order block. We're all looking for the bearish candle that looks like this and it's sitting there, it hasn't been touched. Sometime price will come to those and react. But then you have to also look for those impulse candles that led to a break of structure and it has validity in it because price, whether it swept some liquidities or it took some smart money traps, etc., build a story together and you'll see a lot more results. But definitely test out certain setups. Learn certain setups and test them out. Memorize a certain setup and how it look. I just gave you guys one of my favorite ones. The ones that changes character, break structure, all in one leg. I'm taking that retracement trade 9 out of 10 times. I'm taking 10 out of 10 times. I'm taking it. No matter what the result is, whether I get stopped out, I'm gonna always take it because my data has told me that I've won most of my trades in that setup that I've lost in that setup. Okay. Any last question, guys? Anything else I can answer or demonstrate before we finish this call? I think everyone is still on mute. Any last questions, guys? Anything else?
No, no, nothing, bro. I just want to say thank you, man, for your time, bro. From this session today, just I've get to have had a good chance to understand a lot of things, from entries and the ways that, and from entries and the invalidation models that you've kept in your trades. I say thank you very much, bro.
Absolutely, man. Definitely. I'm glad that you got something out of it. We're all learning, we're all growing. I didn't quite get a chance to go in depth with every single detail that Urimi updated us on. from this entire trip. We wouldn't have enough time because, it takes days. But on our next calls, little by little, I'll unravel more and more details as they come to my mind. Like I gave you a little bit with the ULEs and a little bit with these impulse candles here and there. The part where I explained to you guys about those three momentum candles, when you see price come to it, expect a reaction. Even those, or I said expect that those will be considered structures and things like that. So um, these things will be updated as I get better. Obviously, we're all going to get better. This is our little study group where we can kind of go over information together, ask questions, and hopefully one day you guys can share your screens and we can go back and forth. We share analysis of not live trades, but previous trades, trades that you guys took and hit TP on, and you can show me what you saw, or trades that you took that hit stop loss, and we can ask questions as to why this happened, and we can educate each other on it. So that way, going forward, when you see that same setup, you will remember, and it doesn't happen again for you. All right.
Yeah, sure, bro, sure. But thank you very much. I hope we can catch next week, my brother.
Sounds good, man. I appreciate you coming in, and I hope you guys enjoy the rest of your evening, night, wherever
Perfect.
you
Thank
are.
you so much. Really appreciate your time.
Nice. You're welcome, Aisha. It's my pleasure. I enjoy having these sessions with you guys. All right, everyone. Have a
Thank
good night.
you. Have a
Take
good
You're
care.
gonna
night.
upload the recording, isn't it, in the set and on the section?
But yes, I'll upload this recording once after it's finished downloading. I'll upload it to the YouTube channel. So if there's anything you guys want to re-review or look back into, it'll be there for us.
Perfect, inshallah. Thank you so much. Really appreciate it.
You're
Take care.
welcome, guys. Have a
Thank you,
good night.
Sauce.
You're
Assalamu
welcome. Bye-bye.